Hello, team. I just want to make a quick video here about the volume and what it benefits me. How do I use it pretty much to identify, uh, to run in my favor, and then a little quick explanation, about volume. So, let's start off. When it comes to volume, I always know that many people are interested in, whenever it has a lot of volume, or it's pushing and it has a lot of volume. They think that it means that a lot of buyers are coming or anything like that, and it could be real tricky. So when it comes to volume, what I use it in volume is that I know for sure the volume increases throughout the day. You have your daily candle that it gives you the whole daily volume. You have the weekly that gives you the whole weekly volume, and then you got 4 hours, 2 hours. It's all based on what time frames you're looking at. But you have to understand what side of volume you're attacking. So when it comes to volume, I make sure that if I'm looking for something, this is going to be a quick one. This is a Webull, the app application and the phone version, and I use BlueStack to be able to run that in my PC. So when it comes to volume, I like to come here and look, who's strong, who has the top volume, but also I want to make sure that that he's going to run my way or towards the side that I'm interested in. So when it comes to volume, I always understand that just because he has this, big volume here, it does not mean that it's going to run towards your side. So if you're bullish, just because he has a big volume does not mean that it's going to, run bullish. It can also mean that it can run bearish. You can go, with puts, with the selling pressure of puts, and shorting or anything specifically like that, the same way in going up with calls and buying shares. So when it comes to volume, like I said, I like the increase because you always have to understand that the more volume he has, the easier it's for you to enter and for you to exit the trade. And if he has real low volume, you're going to have a real hard time to enter and to exit. And so when it comes to volume here, I like to scroll from the top to the bottom in this section of the most active, for the reason being that, it gives me where institutions, where buyers, or where the big players are at. So I want to make sure, I'm in their side. So when it comes to momentum, my first key is not to be sitting in the gap. I don't want the ticker to be sitting in a gap, and I want to make sure that it has top volume, but the momentum, which is the FETSO, the RSI, and the AMC, it's pushing an upward move. I want to make sure that they upwarding with the volume increasing, right? And especially throughout the day. So when it comes to volume, I always understand that if you're attacking a specific volume, you have to make sure that it's uptrending in your favor if you're doing calls or you're a bullish trader. So when it comes, like I said, I like seeing that it's not sitting in the gap. And if it's not sitting in a gap, I add it. If it holds specific price points or it's holding price throughout the day, or it's uptrending based on the uptrend of higher time frames, then I like to trade that, or has me interest to trade that eventually, right? That should benefit and make you money. So when it comes to that, I like to make sure that it's not sitting in the gap, and I like keep going, right? Keep AOT was another one that you can see the increased volume here. You have a one pop, and then you have a less one, then you have one pop. But the increase of momentum was the same. You got to increase intentions to overbought and the FETSO RSI and also in the AMCD. And Hassel has the intentions to fill the gap. So he has so many factors here that you have to consider when it comes to just volume. And you keep scrolling. So when it comes to volume, even this one, you're gonna see that this one for the day, it had 126 million, but pretty much all it did was it dipped market opens to come back midday. Actually, I think it popped market opens to dip the same market opens to come back midday. So if I were to show you a chart here in the 2 minutes, actually let's go to 5 minutes so it can be a little more. You can say, see, it pretty much dipped midday to come in reverse midday. I mean, it dipped market opens to reverse midday, and redip again and stay in the same channel, creating a doji. So what I'm trying to say, just because this thing has a big volume here and big, it doesn't really mean that you're pretty much setting up to run $11 again. It's setting up to, come back down a bit. So that's the intention of that, right? So just because he has a good buying candle here, and it doesn't really mean that it's buying pressure. It can also be the selling pressure building up. So when it comes to the third one, that's something that I want to avoid if I'm not in it from way back there, or if I already took profit, that's something that I wouldn't be interested just yet. And then you keep scrolling, you go to any is another example that the volume was building up, momentum was on it. Now the momentum shifted with the whole offering. And out of that, momentum shifted. Now it's in the man of selling pressure. So that would be something that I wouldn't be interested now if I'm not a seller or buying puts on it. So other than that, since he's not building up towards the momentum, that's not, I'm a bullish trader right now. So I don't want to attack that just yet. And if I keep going now, you're gonna notice Matt, it's increasing, but it's not sitting in gap. But also volume, selling volume, buying volume. But at the end of the day, what matters is the intentions that he's having, no gaps, and it's uptrending with momentum in their favor based on not just daily, but weekly as well. So what I'm saying, when it comes to volume, I always understand that it does not necessarily mean that it's going to be bullish or it's going to be bearish. And I'm going to show you two examples here. Volume also increases, and you have to understand how it's counted, meaning that if I sell 200 shares, someone buys it, that right here, that right there, it's already 200 volume in the ticker. So overall, you're going to see that, it was traded 274 million and back and forth on it. So what I'm trying to say is volume increases, it goes from zero, and sometimes, by pre-market picks up to 1 million. Others are just 100,000. They end, but the end of the day, into 1 million. Others are 1 million. They end into 20 millions. And you got the ones that are 10 million market open. They end in 300 million. But that also means price, like, the interest, demand pressure of the price to increase. So when it comes here is, I'm going to show you two examples of what I mean by the buying pressure and the selling pressure. And sometimes the volume needs to be in the right demand. So even less volume can do so much price action. There's so much volume, and the demand is the opposite. So I'm gonna show you here is, remember what I like to make sure that the volume is increasing, higher time frames is building up an uptrend, and the volume is also increasing with it. But also, you have to make sure you bring knowledge into it. It's not just volume. You have to make sure what you're attacking or how you're attacking things. So we're gonna put here these two here. You're gonna have one that you're gonna notice here that only had 300K volume for the day, but it increased, and you're gonna notice that the volume wasn't that great. It was real low, but it was, doing transactions. So even, 5,000, 1,000, 8,000, blah, blah, blah. This end up closing at the end with just 300,000 volume, or 351. And this one period day was only 60,000. But look, it came from 16 to $27, running a previous high, all times high. So this is just 300K, did a bullish run. But the increase here of buying was in the momentum, in the RSI and AMCD, but also in the candles. 300K volume, it pushed the price up to make you money if you're attacking the right place. Like I can see right here, it's not in a gap, it's increasing. But even in prior days before, you're gonna notice that you had such a weak volume, but higher time frame with a demand that it was uptrending. That's just one example, and I'm gonna show you the other example here, that it's this one. You see, 64 million, and all it did was downtrend. Why? When did it open up? This one opened up at 887. Where's 887 right here? Look at this huge gap, and he's done it before. Huge gap had the potential to what? Fade. Even if he had such big volume that came from pre-market, it came from the previous day, because 7 million into 64, and that 64 still was, it was big volume, but it didn't mean that it was going to keep running. It could mean that it had the volume, to put the pressure into selling buying put. So if you had options, but the selling pressure was going to be real stronger than than the buying pressure. And if you go into this one opened up at 998 to dip a low of 1826. This is the 1826. It came to the previous candle to run up, and put the pressure up into the demand of momentum, but also the candles that it was building an uptrend. It didn't open. Remember, market open, when it says open here, that's market open. That's when the print shows up. This one, it opened up at 887, such a big gap. Nothing was just, nothing was being, traded there while market was open. It was in pre-market. So that created a gap to fill that gap and come back down, even with a strong volume of 64 million. And this only had 300K, but you can see the difference of when you're attacking the right place or the right time. So if you go back to this one, you're going to notice that all it did was downtrend. You see this? If you go to 1 minute, well, actually, let's go to 3 minutes, you can see the downtrend a little better. You can see all it did was fade. If you go back to this one, into the 5 minutes, you're going to see all it did was uptrend. Even with a lot of volume, but the uptrend was there in the right demand. Even if you go to this one, I'm going to show you another one here real quick. What I did right here. Okay, I'll flip it up like that. Okay. I think I did. Let me see, flip this to the side. Okay. Yep. Let me flip that like that. And then I'm gonna flip it back. I'm gonna go back and then I'm gonna flip it back again. So I can do this. There it goes. So that the volume, was increasing here. And you're gonna notice that, it's all based on low volume. So what I'm saying is make sure what side of volume you're attacking. Volume is super important because that's where buyers or sellers will be in. If you attack at the right side of volume, that should help you make money towards the side that you're pretty much making money. Because you're not gonna attack something, right? And put 2,000, put your money in, and you want to lose money. You want to make sure you make money. So you have to make sure that you're right. You attack the right side of volume. Volume increases based on float. Based on float, that's based on the range. It's just so much, not just volume, but other factors as well. But just know that when it comes to volume, it helps me to identify how the ticket should be moving out. What I do like 100K and over volume as a starting point increase. And if I see strong uptrend time frames like daily and weekly, then I would love to see 1 million, 2 millions, and build up throughout the day into continuations. So when volume, volume is super important for continuations, for pops, incoming higher highs, incoming all-time highs, and all that, because eventually it starts increasing, and putting pressure and then demand into running that level that you're gonna be in, making money in. So that'll be all for today, I guess. That's just kind of a little explanation of volume and gaps and all that. Remember, gaps is something that was trading between after hours and pre-market, and it was not printed in the daily time frame because market was closed. When market opens, that's whenever the candle starts. And if it's sitting in the gap, means that the pre-market right 5 minutes before market open is trading at $9, and the previous days was $7. That's a gap already because market opens was not open when it was trading at $9, and the print is not shown in the daily. And that's just another factor that I'm gonna go over again some other time. But for now, that was just based on volume in the interest of what should help you in. So remember, it is important to know what you should be doing, what side you're attacking in, but also volume can mean both sides. Just focus on the uptrends of high time frames. And even if you're day trading, you have to focus in the high time frames to make sure that the volume of bigger time frames, big institutions, or like people that making money long term, attacking the right side, so you can be attacking the right side as well. You don't want to go against them. So that'll be all for today. And until next time, peace.